And now we change to the crypto industry and to Coinshares and CEO Jean-Marie Mognetti.
Thank you, Philip, for having me. First of all, sorry for my Swedish. It's pretty poor, so I'm going to stay in English despite the first slide being in Swedish. I woke up this morning and my phone keeps ringing, asking me where is the price of Bitcoin going. We hit an all-time high yesterday at 69,300, and people were like, where is it going? The truth is, nobody knows. The only stuff we know is like price are discovered at the margin, and the price will be significantly higher. This is not investment advice, it's just purely the offer and demand imbalance which is happening right now. Now let's talk a bit about Coinshares. And let's remember about what number? $85 trillion. That's the amount of money which is going to be moving from one generation to another over the next 20 years. Of course, the new generation invests in crypto, invests in plenty of stuff differently, but the generation who still have the control and still have this money want to invest and need vehicle to invest. And that's where Coinshares comes in, if this stuff works. Yeah. So Coinshares is the leading European investment company specializing in digital assets. That's who we are. Our goal is to become a global company, a global leading investment company specializing in digital assets. And we have been doing this journey for about 10 years. Funny enough, BlackRock entered this journey recently, and it took a month to do what we do in 10 years, but the powerful of BlackRock is very different. So, our journey took us from London to Sweden as early as 2016 when we bought XBT provider from KNC miners. And since then, we keep deploying ourselves in Sweden, in Europe, eventually becoming a listed company in Sweden. It's all about growth. The company is a very growth-focused company. We have been extremely good at creating value from a balance sheet perspective and are working very hard on how to translate that value creation into value for our shareholders. Coinshares key business are very simple. It's like 3 vertical: asset management, hedge fund solution, and capital market, giving you exposure through 3 different ways to cryptocurrencies. Asset management, we operate 3 platforms. The one you know very well in Sweden, the XBT provider. XBT provider is listed on Avanza, Nordnet, and all the brokers in Sweden, and has been a very successful story for many, many Swedish investors. Hedge fund solution is a bit of a more advanced pattern, which is allowing people to get exposure to cryptocurrencies, but to really go for the alpha part of it, not the beta exposure, more the alpha part of it. And all that effectively is underpinned by a very strong capital market business. And this capital market business allows the asset management business to be competitive and allows the hedge fund solution to also be very, very accurate in this trade and execution. So these 3 businesses effectively are very, very, I would say, complementary of each other. Coinshares overall is a very profitable Nasdaq Stockholm listed company, and I insist on profitable because there's a lot of companies which are listed which are not profitable. We announced we were starting to pay a dividend because we want to be able to translate some of this value creation to our shareholder. I can spend a lot of time on details, but it's 19 product listed, it's 83 staff across 4 or 5 different offices. It's a lot of regulation, as you can see. We're not doing it in an unregulated way, so everything we're doing is future-proof, so that we can grow and scale with the regulation coming in. So, with the regulation coming in Europe, Coinshares is ready. The regulation coming in the US, Coinshares will be ready, and Coinshares is on this extension path. The net asset of the company at the end of the Q4 is around 238 million sterling. So it's not ACK sterling, sorry. So multiply by 12 and you get your sterling number. And Coinshares is also able to scale all that for the matter of having this very strategic capacity to invest in key company. And we have over our life be able to extend our investment capacity in that matter. So if you want to just wrap all that in your head and say, okay, well, how did Coinshares interact and works, and how do I make sense of the money we're making? It is quite simple. The asset management business we described already is just management fees, and it's management fees effectively on AUM. The hedge fund solution is a management fees on AUM, and the capital market is a spread on volume. So from an investor perspective, by tracking public number, you can very, very easily have a kind of an interesting view of where the company is going, where the revenue is going, and how that's impacting the bottom line of the company. All that being quite interesting in the fact that it's non-cyclical, so we are able to operate and keep making money, whether we're in a down cycle or an up cycle. So we're making money when the market rally like we see now, but for the last 2-3 years, we've been making money as well, despite the market being in a total bear market. And that's kind of like reflects the AUM growth of Coinshare. So Coinshare at the end of Q1, I think this number is a bit off anyway, but like as of last night, we're managing around $6 billion US, say 4.3 billion sterling. But we are reaching back an all-time high in our asset gathering and our asset management as we speak. That's obviously driven by the price appreciation of one of our key underlying Bitcoin, which, as I say in the introduction, is hitting an all-time high. What is interesting to see is like how the legacy platform, XBT provider, is over time reducing its impact on our revenue, and our new platform like Coinshare Physical and Block Index, which is a joint venture with Invesco, are starting to take more and more place in our product mix on the asset management side. And if you were wondering from how this effectively this AUM is translating in revenue and EBITDA, so that's a view of our adjusted EBITDA. I'm not going to bore you with detail while we're talking about adjusted EBITDA and not just straight up EBITDA. It's down to accounting standards. So what you guys see when you go on your Avanza website as natural PE and earning and metrics is wrong, because the way all this kind of I would say data scrapper industry functions, they don't adjust for intangible asset and the kind of accounting issue which are related to digital assets. So don't look at the number you see on Avanza for or Nordnet for ratio or earnings or PE or anything. Just focus on the key metrics and the revenue, and go to our earning reports if you want to see it better, because this website don't give you the right numbers. And then you say we were talking about BlackRock coming in, we were talking about Coinshare being in business for 10 years. So what is our kind of hedge and how do we make money effectively? And I think the answer is like we have powerful margin. And the powerful margin are driven by what? They're driven by two factors. First, we have a very strong capacity to influence our operating cost advantage. Our operating cost advantage are driven by our size, and we can make sure that we're reducing all our operating costs with our provider. And one of the key providers is custody. The way to remove the custody barrier is by entering the custody market. So in 2018, Coinshare make a JV with Nomura and Ledger, a French cybersecurity company, to make sure we're controlling this vertical and make sure we're having a pricing power on that and not just be another player. Same thing with staking, same thing with exchanges. We have like a relationship everywhere so that we can make sure that we have a pricing power and a pricing influence on all this kind of operating cost. And that also drives another pricing power advantage, which is the pricing power of our products, where Coinshare brand itself is carrying a lot of goodwill. Coinshare market share and AUM is driving also natural attention and people to invest in Coinshare, because people want to go in the product which has a lot of AUM, because you don't want to be the single guy in a product with no AUM. And then we have a strong capacity of product differentiation. And that's kind of led to Coinshare since 2016, when we start our journey in Sweden. I think I landed the first time in Sweden of my life on the 12th of June 2016 to make this transaction with KNC Miners bankruptcy estate. And the story is like, it's a growing annuity business. We keep growing our business year on year. As you can see, the adjusted EBITDA is not really negative at any point in time. Our projection for 2014, based on public number, if we extrapolate, is around 95 million sterling. That's a base case scenario based on what we see, and we're on a good trajectory to keep going. But the interesting part of this growing annuity is like the way our EBITDA margin is impacted. And if you can look at it, it's like the beauty of Coinshare is like it doesn't matter how much money we put to work in terms of AUM. Our base cost is pretty standard. Our base cost is pretty flat, and is like where it is. It doesn't matter if we manage 2 billion or 20 billion or 200 billion, our base cost is like fairly not scalable with the AUM. The AUM scale very well, our base costs remain flat. So you can see our margin right now for the year of 2023 was published around 69%. if the price go up by 100%, our margin goes up to 80%, but our cost base don't move. And that's the beauty of this business. The cost base don't need to be inflated to be able to scale this business. So we are where we are. Whether our AUM go down or up, our cost base is like optimized for the company, and we can just keep growing. So, that's our ambition, becoming a global leading alternative asset manager specializing in digital assets. The global leading, we are doing it right now. We have a transaction happening in the US to start to put these words in action and not just be words, and that will let us enter the US market. Alternative asset manager, we're targeting institutional investor, high net worth individual, and also the retail market, but we're really seeking diversification and risk managed approach for our clients. And then specializing in digital assets. That's something we're doing since I started counting, but 2013 now. Our background before was commodity trading and commodity hedge fund, and we moved into that. And we always came to crypto with an idea of like, what do we do first? And if you look at this kind of long list of 1, 2, 3, 4, 5, 7 items, it's like 7 items of first innovation in the market, and that's what we want to leave the market with. We want to leave the market the perception that and the reality that Coinshares DNA is innovation and is product transformation. So our strategy going forward is very simple. Our key principle is organic growth. We have this great platform. We need to scale them in Europe, and also external growth. One of the key characteristics of Coinshares management is the capacity to make great deal and turn non-performing asset into performing asset. I think the best example of that is what we did with XBT Provider in Sweden. We bought it out of bankruptcy and took it to the business it is right now, which is still the main contributor to our business today. In terms of diagnosis, the largest asset manager win. So we need to keep scaling our AUM. We need to be able to keep being bigger and bigger. And for that, we need to find also non-performing asset and keep selling our product. And finally, the kernel of the strategy is like we want to become the leading global asset investment company specializing in digital asset. And for that, expansion is key. So we're really focused on expansion and not, just waiting for the market to find a hedge for us. So all that together is creating Coinshares, which is, I think, a unique investment company, not just because I'm the CEO, but because I'm also the second largest shareholder. And I kind of believe in this company, and the amount of stock I sold equal to 0 over the last 2 years is kind of like, since we get listed, it's kind of a testimony to this long-term view we have for the business. Few numbers. They're all in Swedish. I'm not going to pronounce them in Swedish because you're going to kill me for not pronouncing them correctly. But that just gives you some ideas of where we are right now in terms of key metrics at the end of Q4. And Philippe, if you want to come back, I'm good now.
Thank you. Yes, I have a couple of questions.
Sure.
Maybe we can start with you. What is your background?
My background is commodity trading. Let me go back to the slide, which is working. My background is commodity trading. I was running a commodity hedge fund with my business partner, Danny Masters. And he's a bit older than me, so he started the company in 1998. So I joined him afterwards. And in 2012, the commodity cycle was finishing or coming to an end, which is ironic now because for the last 2 years, it's been pretty active. And we were looking for another opportunity. And so we did a bit of I would say, psychoanalysis of who we were and where we were coming from. And when crypto came our way, we discovered that it was really checking the box for the deep value investor we were at the time.
And what are the benefits of investing in Coinshares rather than investing in Bitcoin directly?
As I said earlier, pricing is made at the margin. It's not a quote from me, it's a quote from Paul Tudor Jones, which is a good friend of the company and a legendary hedge fund investor. And what you see when you're buying Coinshares, like you're buying effectively a company which has a capacity to appreciate. By any factor right now, Coinshares is trading at book value, which is a liquid book value, not like a fancy book value with like a lot of markup on VC investment. So it's a real tangible book value. And what we see is like Coinshares has a capacity to have a very strong acceleration on this pricing trajectory and a long-term trajectory versus an asset underlying like Bitcoin, which will be kind of very volatile. When Bitcoin goes down, we still make money. When Bitcoin goes up, we still make money. So it's a long-term appreciation. So I'm not saying don't buy Bitcoin or don't buy XBT provider. You can definitely buy XBT provider, but in terms of diversification of your portfolio, having some Coinshares in your portfolio will bring you a lot of diversification.
When did you buy Bitcoin for the first time?
2013.
Right. And in the sector, you're in the forefront when it comes to compliance.
Yeah.
And have you started harvesting the fruits of this, or is the best yet to come?
Look, actually, it's a very interesting point you're mentioning, because the compliance issue has been upon us pretty much by luck, because we were operating a regulated hedge fund before. So we couldn't really go into crypto saying, oh yeah, we know everything about AML, we know everything about front running, we know everything about the rules of trading and securities trading, but we're going to pretend this is not something we learned before because it doesn't apply here. So we always went into crypto saying, okay, there is a possibility that eventually this is going to be regulated, and we don't want, we will be the perfect scapegoat for a regulator to say, well, you guys knew exactly what you were doing. Don't pretend you were ignorant. So we couldn't say we were just scientists, didn't know anything about it. We were kind of like professional from the financial industry, so we couldn't ignore it. So from the very get-go, we were regulated. Before anybody even think about regulation. 2014, we launched Global Advisors Bitcoin Investment Fund. It was the very first fully regulated hedge fund in the world. When we bought from KNC bankruptcy estate XBT provider in 2016 in Sweden, one of the conditions NASDAQ put on us, along with SFSA, is like, we're only selling this company to a regulated company. So if you were non-regulated or equivalent regulation of EEA regulation, you were not passing. So in some way, we already harvest a lot of these fruits over time. And it's not like something you have, it's not an end goal to say, okay, we're going to harvest that in the future. It's more like it's a permanent target where we get the benefit of that all the time. Our relationship with Invesco, for instance, which is one of the joint ventures we have, Invesco being one of the biggest asset management companies in the world, is not only down to the fact that we have a good team and they like us, but it's also the fact that they can converse with us because we apply the principle of regulation they understand. So they speak with us and we speak with them, we speak the same language. So I'm not going to say that there is a day in the future where we're going to harvest the benefit. It's a permanent, perpetual harvesting. We are acquiring a company in the US right now. We're working on this transaction. The fact we regulated in the US already makes this transaction 1,000 times easier. We're listing new products. The fact we're regulated makes it 1,000 times easier. We talk to the SEC in the US. That's make it much easier. So all this kind of situation we are dealing with on a day-to-day basis is getting easier and easier for us because we did the hard work before to be regulated. So it's not going to be like a, as you say, harvesting, like a day of harvest at the end. It's more like a continuous harvesting.
Yeah, right. And your board recently decided on a changed dividend policy. Could you elaborate on this?
Yeah, look, it's a very simple thing. It's like we are in an environment where a retail investor can get 5% on American Treasury without taking much risk but the country risk of the United States. And so you end up saying, okay, how much do I believe in the United States balance sheet? But people see it as what we define as risk-free. So when we have a company which is performing very, very good at creating value from a net asset value perspective, but the stock price is kind of flagging because it's trading at book value, you need to find a way to incentivize investors to come, and to say, okay, we realize the company is not translating this value creation very well in return on equity or return on capital to our shareholders. So how do we incentivize them to stay or to come? Because you can have a high, and it's not like we're doing a massive dividend who's going to prevent the company to keep growing. The company will keep growing, but the company is making good money. So if the stock price is not there to perform, then let's start paying a dividend to our shareholder and make sure they feel like they are on the journey with us and not permanently waiting.
And you went public in Sweden 2021. Why did you go public and why in Sweden?
Which one you want first?
You should.
Well, why did we go public? Public is an easy answer. Back in 2021, I was spending 2020, because it took almost 6 months to get listed. So back in 2020, I was spending probably 80% of my time feeling regulator question. I was not doing any business. It was this audit regulator of any jurisdiction having a question. They was having a question every day. And at some point, I said, well, we're disclosing so much information to so many people. Let's find a way to make it transparent for everybody, not only for us, but our shareholder and the regulator. And let's find a framework which works and say, okay, well, let's get listed. The reality is like we're a Jersey-based company in the UK, hence my terrible English accent. But we couldn't list in the UK because the UK was closed down to, that's the second part of your question, by the way. The UK was closed down for listing any crypto company. And they are still to date. You know, if we wanted to list Coinshares on the LSE right now, we won't be able to do it. And at the time, the only market which was open was the US and Europe. In Europe, Sweden, so forget about the US because we're not US GAAP and all this kind of lovely framework we need to be listed in the US. So let's focus on Europe. And in Europe, Swedish market is the most dynamic, back in 2021, was and still is probably the most dynamic market in Europe. We have this fantastic relationship with Nasdaq since 2016. We have grown this partnership as a win-win partnership for them and for us since 2016. We have this very great franchise in Sweden and the Nordic called XBT Provider, which is one of the largest investment product in crypto, well, the largest investment product in crypto in Europe, but a very nice Swedish-based successful story. So we say, well, we have enough kind of data point to connect us to Sweden, so let's do that in Sweden.
And you showed us margins of 80%, which is impressive. Where can it go, do you think?
Well, it's blocked at 100%. We can't go higher than 100, like mathematically speaking. But where can it go? Look, if a business like 80% margin business is a very good business, like PE firm are dying for 30% margin. So the question is not where can it go. It's more like what do we do from it? What do we do from it? One is like make sure our shareholder gets the reward of this performance. And then it's like, how do we stay relevant and how do we scale this business to become a global franchise? And we're spending a lot of time thinking, analyzing, and also acting on how to become a global franchise. And as I was mentioning, this acquisition in the US is one of these elements for us to stop just thinking about it and start to put action behind our words and just say, okay, we have a strategy. It's not just a glossy, shiny piece of paper. It's also actions, and we are expanding in the US as one of these actions.
Have funds and other larger investors start showing interest in Coinshares?
Funds? Oh, well, so the cap table of Coinshares is a pretty stable cap table, and you will see on our kind of like top 10 cap table some very large, well-known, I would say, hedge fund global macro investors, which see in Coinshares effectively. I'm not speaking for them. I'm just trying to see what they see, which in Coinshares a very interesting way to get exposure to the digital asset ecosystem through an equity play. In terms of like fund coming to Coinshares, you can see that if you drill into the kind of report, you can see some few indexes starting to pick up Coinshares. You can see some few company starting to track Coinshares. So I think on our list of shareholder, you can see Rothschild as a small position. You can see Arbervel in Paris as a small position. You can see Handelsbanken Fonder as a small position. You can see SEB Fonder actually Handelsbanken as a growing position. I think it's almost 1% as of last night. SEB Fonder is growing as well. So, effectively, the company now is maturing to a point where it's starting to be picked up by indices, allocation, and model portfolio. So we see some natural rebalancing on so the next journey for us would be how this is picked up by ETF allocator and the company start being wider in its allocation.
Thank you, Jean-Marie Mognetti and Coinshares, and good luck.
Thank you, Philippe.